Hey there, and welcome back to Crypto Clarified. This is a podcast series where we come together from time to time to discuss the most captivating headlines and trends from the crypto space. We also have very interesting guests on. Today, I'm joined by Gabriel Gruber, CEO and co-founder at Exactly. Of course, my name's Benjamin Dean, and I'm director at WisdomTree's digital assets team. Before I ask Gabriel to introduce himself, we've got to do the usual social media shout-outs. US listeners, go to wisdomtreeprime.com, check it out. You won't be disappointed. Wherever you are, if you're in podcast land, if you're in YouTube land, hit subscribe, share with your friends. Sharing is caring. And as always, you can find me at any time on the Bird app at Benjamin Dean. On today's episode, we're talking with Gabriel about himself, his background. It's always interesting to hear how folks get into the space. We're going to talk a little bit in broad terms about crypto in Latin America and Argentina more specifically. Then we're going to turn towards credit markets. Credit markets, why can they be dysfunctional? How might a decentralized alternative solve some problems? And then, as always, we're going to finish up by thinking about the future, because if there's one thing we love more than clarifying crypto on this show, it is thinking about the future. Before we begin, though, I have to do this shout out to James and Sam in compliance. It's the most interesting part of the show, folks. Don't miss it. Before I begin, I need to state the following. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Exactly and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. Information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities. Reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. All right, on to the fun stuff. Gabriel, welcome. It's nice to have you here.
Hi, Benjamin. Thanks for the invite. It's a pleasure to be here today with you.
It's great to see you again. I had the pleasure of meeting you in person, IRL, a few weeks ago. And I'm delighted you can take the time to chat with us today about yourself, what's going on around you there. It's a very lively community down in Buenos Aires. To kick off things, though, let's talk a bit about you. How'd you get into this space? How long have you been around? What drew you in? It's a fascinating space, so it's always interesting to hear people's backstories.
Yeah, sure. So I study I study economics at the University of Buenos Aires. I've been working in finance at the beginning of my career, the Central Bank of Argentina, asset management, and co-founded two startups in Web 2. And the last one was sold, so I was thinking, what's next? So a couple of years ago, I sit down and trying to understand what's going on, and I realized that DeFi was a thing. People are depositing and borrowing money on a smart contract, and for me that was amazing. So 2 years ago, I started the Exactly protocol. Basically, the idea is to allow the end consumer to use this amazing technology in a simple way. So we need to build more stuff on DeFi in order to get there. It's going to take time. There's security issues, scalability issues, and in our side, we are building the infrastructure to make sure that the end consumer can take the advantage of using a decentralized protocol to understand where the yield is coming, to see everything on chain. So all the advantages that DeFi can provide. So long story short, we started with Exactly 2 years ago. We have a team, from many countries, but most of the team is from Latin America. We raised in total $5 million. We are on mainnet, we are on Optimism, and the protocol allows you to borrow and deposit money on a variable rate, but also at a fixed rate. And basically, that's the interesting part.
Got it. Well, we've got two things in common, at least then. One is having studied economics. The second is, working in asset management, which is delightful. But what was it that tripped you or gave you a suggestion then that this technology that came along might have some potential and might be potentially a path to go down instead of carrying on doing what you were doing?
Yeah, sure. So when I was in my previous life working as an economist in asset management, doing portfolio management, for me was not super interesting. Was interesting in one sense, but then I want to be a player to create value, to make product. So I started a company called Sumavisos, then a second one called Properati, which was a real estate marketplace in Latin America. And we built a mortgage broker solution on top of that. And in order to allow the end consumer to have the best option to have a mortgage, something that the US is super common in Latin America, people have to go to the bank, fill a lot of papers, and it's super difficult and complicated process. So we try to make a platform to put together all the potential mortgage solutions, a mortgage broker online. And I realized that was almost impossible to do that. Super difficult. The banks don't want to share information. In every meeting, they were like 15 people from the bank, and then nothing happens. It was super difficult to create this product. And I realized that you know the current technology, it is what it is. Every bank has a different database. It's of course proprietary. The information is there. They don't want to share it. There is a central bank that is basically making sure that everything is closed. So I think that the current financial system works on the same way that 20 years or 30 years ago. So you have amazing new front ends, you have fintechs that are providing a better UX, but the backend is the same. So when I realized that we can change that and we can create a new backend that is decentralized, that is open source, that is permissionless, and it's global, so everybody can use it no matter where you live. For me, that was okay, let's do it. And of course, the most interesting part is that it's autonomous, so it doesn't require human intervention. So we provide the platform, we upload the code to the blockchain, and then it works. And it's permissionless, and you can, you know, take your money out wherever you want, and it's non-custodial, so it's amazing. But of course, it's difficult to be used, and it's all for variable rate, so the interest rate is changing every 14 seconds. So it's not something that the end consumer will use. So we want to solve that problem. So that's why we provide a fixed rate and variable rates as well. But the interesting part is that you can deposit and borrow money on different fixed rate pools. We create a yield curve on top of Ethereum and Optimism. So far, we have more than $10 million in fixed rate pools up to 6 month period. We're going to extend that in the next few months, but we are creating the bond market on chain in some way. So the opportunity is amazing and it's huge. So we are one of the few protocols, you know, trying to solve this problem in a very different way than other protocols. It's a little technical, but basically so far most of the protocols try to discover a fixed rate based on the price of maturity token, and that approach didn't scale so well. So our approach is different. It's using the same approach that already works for variable rate, which is discovering the variable rate based on the utilization of one pool. And on top of that, we have several fixed rate pools, so you can discover the utilization of variable rate, but also 6 different fixed rate for different assets. So everything works in the same protocol. It's super easy to use. And of course, security is priority number one. We have been doing like more than 10 audits of a protocol since we started. So yeah, we are super bullish about this. We think the opportunity it's huge. In DeFi today, the total value lock for borrow and lending, it's around $10 billion. But the total addressable market, if you take into account CeFi and traditional finance, it's several trillion dollars. So I think we are in the first few days of this.
So let's unpack a few things there for the listeners. Not everyone's going to follow everything you've just said, but there's some important elements there that they should be aware of. One of them is how you've built things, which is an infrastructure question. You mentioned that you built it on Ethereum and Optimism. Can you just quickly run folks through why you did that? Because there's very specific reasons that, in essence, if you can unlock those opportunities, it creates something that's scalable and sustainable, potentially.
Yeah. So everything started with Bitcoin, the story, Satoshi, Nakamoto, blah, 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 after the 2008 crisis. And it's amazing because it's the first decentralized blockchain where you can basically, transfer Bitcoin in a way that was not, it's totally new. It's amazing. It's a new form of money. But then Vitalik came and said, okay, let's use the same idea, but instead of just transferring Bitcoins over the blockchain, let's create a blockchain that you can create and run applications on top of the blockchain. So, of course, one application could be money, like Bitcoin. You can transfer ETH on top of Ethereum. But the interesting part is that you can code smart contracts. Basically, it's software that you code in a specific language, which is Solidity, and then you upload the code to this blockchain, and then anybody can execute the transaction and deposit, and in this example, deposit and borrow money using your code. And basically the code, basically it's like a small bank where basically people deposit money, and then people can borrow money, put in a collateral, and then the interest rate is a function of the demand of credit. So there is a mathematical function that determines the interest rate, but everything is on code, and you can audit the code, you can check the code, and you can understand how the interest rate where the interest rate is coming. And basically, it's coming from the demand of credit. So everything is on chain, everything is open source, and everything is running on a blockchain, in this case, Ethereum, that it's decentralized. There are thousands of computers running this network, and it's amazing. So it's decentralized, it's super secure. There's proof of stake. There are billions of dollars in money in order to make sure that this network is secure. And with Optimism, which is an L2 solution, also now it's scalable. What is scalable? That in Ethereum, in order to do a transaction, let's say deposit money, you have to pay, I don't know, 20, 30, $50, depending on the gas price, but it's a lot of money. If the transaction is let's say, if you deposit 100, you don't want to pay $20 in transaction fees. But then some of these L2 solutions came on and developed a new platform on top of Ethereum called, in this case, Optimism is one of them. And basically what they do is they pack a lot of transaction in one transaction on Ethereum. So basically that's the idea. So let's say I send you a photograph via email, and it's the size is, I don't know, 10 mega, and and you can use a zip code to, put the photograph in a way that doesn't have the size is reduced, and it's easier to be transferred. So basically that's the idea. They take a lot of transactions with Optimism, and then they go to Ethereum once with all its transactions, and then execute all the transactions at once. So that's the
Yep.
main idea of Optimism. So you can solve the decentralized with Ethereum. It's secure because you're using Ethereum. And with Optimism, it's the scalability, it's resolved. So the cost of the transaction is a few cents. Right now, it's around 5 cents per transaction.
Yeah, one of the criticisms over the years I've heard from people is, it doesn't scale. It's too expensive. Like you just said, no one's spending $20 for transactions because someone's put out an NFT collection and clogged the network. What's interesting that it's occurring right now, and that's why I ask you about it, is because these what are called layer twos are rolling out. There's many of them. They have different ways of solving the scalability problem. But for you folks, you've already integrated it. And the more folks I speak to, the more I see it's Arbitrum, Optimism, zero knowledge rollups are coming out as well. That's totally changing the economics underlying the kind of scalability and the economics of the use of these networks. Another criticism that people have leveled for years against DeFi apps is around security. They say, oh, well, smart contracts can be buggy, and you've seen plenty of them get hacked and tons of money's been lost. Just go in there a little bit to the security element, because you mentioned you've had 10 audits, which sound like they're thrilling. I have to work with the smart contract auditors from time to time, and as interesting as they are, because they're mostly hackers, 10 audits. So just explain to the audience a little bit there, like the need to go and do that, and the fact that it's in place, and what it means for kind of the longer term potential sustainability of DeFi, and exactly just all
Yeah.
writ large.
Yeah, just to give you a number, we have today in June, we have $60 million deposits and $40 million in borrows. So we have a $20 million in total value locked. So that's plain English, is that there are $20 million sitting in a smart contract that if someone finds a way, this hacker can take $20 million and transfer to its own wallet. So we need to make sure that that's not happening on the protocol. So in order to do that, you have to do a lot of things. Of course, you need to have great developers that are using all the best techniques to make sure that the protocol is safe. So it's not just about coding; it's also about all the things you are doing for testing. So we have a lot of testing tools, and all those testing tools are available if you want to use it or you want to check by yourself. And it's very important also to use external audits. So in this case, you hire an audit firm, for example, ChainSafe, which is an audit firm from Canada, or ABDK from the Europe, or from Argentina. There are also a couple of them. So there are, I don't know, 20 or 30 good audit companies, but they're not more than that. So it's expensive. And those companies basically have a team of hackers and engineers and mathematical people that study mathematics in order to make sure that they can hack your code. So they try to find a problem, the code, and then they send you a report. And then with that report, the team fixes all the potential problems, and then goes back to these audit firms, and we fix everything, check back. So they check, and then they send new report saying, okay, we found all these potential bugs. They're high severity, medium severity, and low severity. And then the team fix all these bugs. These are not bugs for the team, so there's a discussion there. at the end, the product is better because it's optimized, it's more secure, you're using less code in order to solve a problem. So it's also improving the product. So we have been doing that since we started. So we start with a product, then we go to audit, then we receive feedback, we continue building, and then when we are ready to launch on mainnet last year, we did 3 audits at the same time of the same smart contract. So we do a code freeze, we stop coding, we share with the auditors that code, and then 3 different teams are looking at the code at the same time, and then they send us feedback. We change potential problems, and then when we are ready, we basically launch the protocol on Ethereum, which is basically uploading our smart contract code into the blockchain. And then the contracts are upgradable, which is that we can make a change in the smart contract. So every time we do an upgrade, we need to audit again, and that's also something interesting because you can upgrade the contract, but when you upgrade the contract, you can introduce a vulnerability, so you have to do all the process again. So let's say it's like running Boeing on Airbus, something like that. You have to go very slow with the software development. You need to test everything and go slow and don't break things. And then we have also a bug bounty program with the Monify, which is a community of white hat hackers that basically, if they found a vulnerability, they share with Immunify. Immunify tell us, hey, there's a potential problem here. And if that's the case, we paid some money to the white hat hacker, depending on the severity of the bug. We pay from, I don't know, 5K, 10K, up to 100K. And, it's a good platform because people can make money and have protocols to be safe. So long story short, security is priority number one because all the money is there, so everybody can take it if there is a bug. So we need to make sure that the protocol is secure, and it's a running process because every time you do an upgrade or you basically do something, even on the front end, you have to make sure that everything works well. So people will try to make, you know, there are bad people in the world. So from 8 billion people, there are a few that are bad guys, and they will try to, take your money. So we need to fight those guys. But I think if you follow the right practices, of course, the risk is never zero. But if you do everything by the book, I think you can live with that.
Well, thank you for that clarification. We love clarifying things on this show. That's why it's called Crypto Clarified. That was a really good, succinct, but still in depth explanation of essentially how security practices have improved over the years with a lot of these applications. It didn't used to be the case. And as you alluded to, the stakes are very high. So it's no joke. It's not hypothetical. It's hard to do, but it's a fascinating cottage industry. You also mentioned something there that's maybe not obvious to listeners, and that's around the upgradability of the smart contracts. Now, I used to hear for years criticisms like, well, if you put a smart contract out there on a blockchain, it's frozen in time. You can't possibly do anything. It'll be there forever. And I mean, that's also totally wrong, and it's different. The idea you can upgrade, you end up pulling in libraries, don't you, to
Yeah,
upgrade it, and then you do it in a version control kind of environment.
yeah. Basically, once you upload something to a blockchain, it's gonna be forever there. It's not that you can change that specific block of information. It's always there, and it's gonna be there forever. But upgradability, it's basically having a layer where basically you say, okay, now you read this new contract. So you change basically, uh, you upload the new contract, and then the protocol will read that contract instead of the previous one. So that's basically how it works.
Right.
So it's not that you are upgrading the same contract, you are creating a new one, but in terms of the protocol works different. So it's interesting, it's something new. There's a trade-off as always in life. So let's say Uniswap now is going to launch Uniswap before, which is new.
Mm-hmm.
It's not that they upgrade from V3 to V4, they launch a new version. And it's good because people can choose if they want to go or not. But it's a challenge because probably people will not want to use V4. They want to use V3. So you need to make sure that people will go there, and then you have V1, V2, V3, and now V4. You have 4 different versions of your product at the same time. I don't know. It's an approach, and it works. Our approach is different. We want to have one version of the protocol with all the liquidity in that version, and also it's important to have what is called a time lock. So basically, if we're gonna do an upgrade of a contract, we'll let people know. We're going to write a post explaining what we are doing, why we are doing that. We're going to share the audits, and you have 24 hours in order to make that upgradability of the contract. So when we make a change, there is a 24 hours time lock in order to the contract to be upgraded. So if you don't like what we are proposing, you can take your money out if you want.
Mm,
So
nice.
again, upgradability has its pros and cons. We think that it makes sense to have it, and we like using it. It's something quite new. Many of the original DeFi protocols don't use upgradability, but I think the new ones are using it.
I appreciate you there explaining the trade-offs involved. Indeed, there's lots of different ways. I mean, in English, you say to skin a cat. Here, in terms of evolving software, there are different ways to do it with their own pros and cons. It's probably not obvious to a lot of people, but what it does point to is that anything that survives in this extremely hostile software environment has the chance of continuing to evolve and improve over time, which means the added functionality or improved efficiency, these are all things that can be possible. It's not a static space. It moves on over time. Can we just run folks through quickly? We'd never do a demo. What I find interesting about exactly is that, and we walk people through, essentially, this is the decentralized nature of it, where anybody with a set of public-private keys that can plug into Ethereum or Optimism can turn up. And so essentially they have to go and lock up some cryptocurrency or token. They could be US dollars if they wanted. And they post that as collateral against the loan that they can then get from others who provide that capital on the platform. Is that broadly how it works?
Yeah, basically it's a marketplace where people deposit money and people can borrow money. And the marketplace, you have supply and demand. So in this case, you have supply and demand. The interesting part is that in order to borrow money, you need to first deposit money and mark that deposit as collateral. But you can deposit, I don't know, ETH and borrow USDC. So, but you have to deposit money and put that money as collateral because it's the only way that the protocol can make sure that it's sustainable. Otherwise, there's no way to, call you at your house and say, hey, you have to pay. So the smart contract itself has to be autonomous. So if you don't pay, your collateral will be by third party will be liquidated. So we have like a system where if the value of your collateral is lower than the value of your loan, that's called a health factor. It's below one. The position can be liquidated by anyone that wants to liquidate the position. We have a bot for liquidation, but it's open source, so everybody can run the bot, or you can run your own bot, and you get a 5% commission if you want to liquidate the asset. So there are incentives for liquidators, and the rules are clear for the depositors, for the borrowers, for the liquidators, and for everybody that wants to use the protocol, how it works. So it's super interesting because everything it's working by incentives. You want to deposit, there's an incentive called interest rate. If you want to borrow, there's an incentive called interest rate. If you don't pay, or if the value of the collateral goes down for any reason, you have to repay, or you're gonna be liquidated. And if you get liquidated, there's an incentive for the liquidator to go back, pay back your loan, and get your deposit collateral with a discount. So every
So
DeFi is about
that
incentives.
the liquidation process then, does it happen incrementally, or is it kind of somebody gets to a point where they simply haven't paid, period, and it's just liquidated by someone or by a bot?
It's an interesting question. So far we have I think like 30 liquidations for $1,000 commission and 20K in terms of dollars. So it's almost nothing in terms of 60 million in deposit and 40 million in loans. 20K in USD liquidated, it's almost zero. But the process it's open source, so everybody can participate, can see how it works, and how it works. If you get below one, so the value of your collateral is lower than the value of your debt, your position is open to be liquidated, and then someone can liquidate and put you back at a healthy position of 1.20 health factor. So this is a dynamic process. So depending how what's your health factor, what portion of your collateral will be liquidated. Some protocols don't. This is called dynamic liquidation process. Some protocols don't have this. So, for example, in Compound, if you don't pay on time, 40% of your collateral will be liquidated. And exactly if you don't pay in time, we're going to look how much collateral we need to liquidate from you in order to make sure that you go back to a healthy position.
Got it.
That's
Got it.
the dynamic close factor, which is the technical name for that, but also there's an innovation on that front.
There you go, folks. Smart contracts intermediating economic interactions, and then liquidation bots coming out and automating the rest of the process. It's it's this is the state of the world today. It sounds super transparent, mostly automated, run by robots, and that's fascinating. I was going to ask you what the non-performing loan rate is, but now that doesn't feel like a very good question, given the mechanisms you've just explained. That becomes not moot, but it's definitely not the correct question to ask, given the way things are set up.
Yeah, we say that we are trying to decentralize a great market today because all these technologies are available today and people are using it today. In this case, the liquidation process is super important because otherwise the protocol is not sustainable. So we need to make sure that the protocol is sustainable. So we need to make sure that the liquidation process is working well. We have a team of people working on that. Everything is open source. You can run your own liquidation bot. It's super interesting how it works. It works with a flash loan, but it's more technical, but it works.
Yeah, that makes sense. That makes sense. Hey, we're going to be coming up on time relatively soon, so there's a few kind of last questions I wanted to ask. They're broader than credit markets, but they're somewhat related. I mean, what struck me when I was down there in Buenos Aires the other week, someone explained to me that there's like a massive hacking community down there that I wasn't aware of. I mean, I grew up in Australia, and there was a big hacking community in Melbourne, at least when I was around that time. I was living there. Like, is there some? You mentioned a lot of your employees come from across Latin America. I've always been impressed at how many people have been building Bitcoin companies in Argentina specifically. But is there some reason, broadly speaking, that there's such a large, lively community of people in that part of the world building or using this kind of technology? I don't know whether it's the system around you. I don't know whether it's like the technical schools. Maybe people just like hacking things or building things. There's some set of reasons you could explain for why it's so lively?
Yeah. So many of the people that start building crypto applications and start, of course, with Bitcoin and then with Ethereum started in 2011 when the government in Argentina had the super great idea of implementing some kind of restrictions to send money and receive money in dollars. So basically, it's called CEPO, which is like the government don't allow you to buy dollars or transfer dollars or receive dollars. And that's basically a problem that for developers that were working for companies in the US or Australia or wherever, they were working as freelancers, they were receiving dollars in their bank account, and then from one day to another one they cannot receive the money. So basically they did a smart contract and they start using Bitcoin and then Ethereum in order to bypass this you know this problem that doesn't make any sense, but the developers and the hackers are quite smart in order to make sure that they can find a solution to this problem. So the problem is that the government start interventing the market, and they don't allow anyone in the country, but especially people that software developers that were working for other countries and they were receiving dollars. So they need to find a way to solve this problem. So they start using Bitcoin, then they start using Ethereum, then realize that it's amazing, and then start building stuff on top of that. That's how many. That's basically the main reason why so many people start building stuff and being related to Bitcoin and to Ethereum super early. Then, in general, I think in Argentina we have a great talent. There are very good schools, technical schools, universities. In general, the education system is free and it's quite good. That's basically my view on why we have talent for crypto and for tech in general.
It's super interesting. And it strikes me also one of these kind of many benefits of open source software. If you have an internet connection and some technical skills, then you can go and use it. You can audit it. You can share it. And it spreads like wildfire when people find, use cases, essentially, ways to fix problems that they solve that perhaps the creators
Yeah,
of that technology didn't even imagine.
if you read the Bitcoin white paper, uh, the guy or the guys that wrote that paper, you will clearly understand that they were pissed off what happened with the banks in the crisis of 2008. So basically, probably lost money or something happened to them, and they say, okay, let's build a new system. I don't trust banks, and in this case, there is a problem with the government. Probably that's the usual. uh, the usual suspect of this, and then someone comes and say, I want to find a solution to this. It was Bitcoin, and then came Vitalik. Okay, let's build smart contracts, and then came more people start building stuff on top of that. And the interesting part is that all this is open source, and that's super powerful. So everybody can build stuff, everybody can learn from each other. So there's a community of people working on these projects. So it's super interesting.
Yeah, it is super interesting. So usually we finish up these episodes just by thinking a little bit about the future. It can really be anything that you're interested in or's got your eye, especially someone who's been in the space for a while and is working on interesting stuff. What have you got your eye on at the moment, or you think that listeners should be paying attention to?
Yeah. So I think the biggest problem we have in crypto in this industry is it's a branding problem. People don't understand what the name of crypto is. So, for example, my daughter, we were watching the World Cup and there was an advertising of crypto.com. And she asked me, hey, what is crypto.com? So it's difficult to explain what's going on. So I think that after all the different scams and Ponzi's and everything that we have been looking at the last few years, uh, the real crypto is emerging, which is cryptographic proof of something. So you need to trust on some bankman or someone that is on TV. You can verify the contract by yourself. Of course, this is difficult for the consumer, but in some way this is going to happen, and I think we are moving forward to that future. So I'm looking forward to have more adoption of crypto, the real crypto, the cryptographic proof, not the crypto.com. So decentralized software, on the blockchain and with good user experience, with very simple security. Now there is a kind of traction, so you need to write the 24 words. So there are many challenges. There is the legal framework in the US that is in discussion. We mentioned earlier that there's scalability protocols like Optimism and CK EVM. So I think the next, I don't know, 12, 18, 24 months, it's difficult to give you exact number, but in the next few months, we're gonna have a very, very interesting, impact, or people will start using this type of software, even if they don't know, because at
Yeah,
the end, this is gonna be the back end of, in my opinion, of the new financial system, and then on the front end will be, I don't know, whatever it is, doesn't matter, but it's important that the back end is run by these smart contracts, and we're gonna have a better system, and in my opinion, that's amazing.
yeah, absolutely. Well, thank you for all those thoughts. Indeed, usability is one of many things that folks are working on and improving. And, it is like hard to put a date on. It's going to be a process anyway, the next 6, 12, 18, 24 months. It's
But
the nice
Benjamin,
thing about this.
if you look today, I don't. I think like Coinbase, for example, is using Uniswap.
Yeah,
So I have a friend of mine who lives in the US. He's a doctor. He doesn't know what Uniswap is, but he's using Coinbase for, I don't know, trading some cryptocurrencies, and he's using Uniswap in some way. He doesn't know. So it's already happening. Of course, this needs to be, there's a scalability issues, and now I think it's going to be solved. So I think we need to wait a little bit more, but we are in the right track, and most of the problems that we know that are there are going to be solved. I'm sure that this is the technology that will be the back end of the new financial system, and of course, I want to be part of that because it's amazing.
yeah, it's super exciting. Hey, Gabriel, where can people find you and exactly on the interwebs?
Yeah, we have a front end. Our front end is also open source, so you can go to GitHub and you can basically fork the front end and run on your own computer if you want. So the web app it's exact.ly or exactly. That's the URL. Then you can access our web app through the website. Then we have a Twitter account, we have Discord, so you can Google exactly protocol, and I think you're gonna find all the information you need.
Yeah, go check it out. It's all open source. And on that note, we're out of time, but I hope everyone found today's podcast useful and informative. If you're in the United States, wisdomtreeprime.com, check it out. You can check out Exactly as well. Also super interesting. You can find me at Benjamin Dean on the Bird app. As a reminder, if anybody wants any topics covered in future episodes, you can contact us on the snail mail. That's cryptoclarified@wisdomtree.com. Thank you very much for listening today. Gabriel, thank you to you. And I hope everyone has an excellent day.
Thank you.